Hi everyone, today we're talking about 3 UK stocks to buy October 2020, and it's kind of crazy that we're kind of in October now. It's gone so quick this year, even though it's been a strange year for a lot of us. And this is the most popular video series that I do on the channel. It's the one that gets the most views every kind of month. We kind of always push near 10,000 views on this video. There's also a lot of new guys that come into the channel to watch this series, so if you are new here, if you want to subscribe, that'll be absolutely amazing. And I know a lot of you guys always look forward to this video series that I do when I talk about the 3 stocks I'm most excited to buy in this month. And if we could set a new goal, I think last time we did this video we got like 400 likes, so I'll make it a little bit of a challenge over the next month. If we could get to 500 likes on this video, it's a big challenge. It would be the new record on the channel. If we get to 500 likes, that'd be absolutely amazing. So have a shot at it, guys, see if you can do it. And if you want to know what stocks I am buying, when I'm buying them, join my Patreons group. The link is in the description below, and I'll get stuck onto the 3 stocks I'm buying in October 2020. So all 3 stocks are going to be stocks that I currently own, and they are my 3 favourite positions. So you guys that have been here for a while, I bet you could guess which 3 they are. But as always, in the comments below, let me know what stocks you're looking to buy in October. But number 1 is going to be Greggs, and by the time this video has gone up, the earnings probably will have come out, so the stock might have moved up, it might move down, I don't know where it would have gone. If it's definitely moved down, I'll definitely be buying a lot more of it. But I probably will have sneaked some more shares in by the time earnings come out. And if it does move in a bad way, I'll be carry on buying a few more this month, because I think that it's a fantastic company. And on a personal note, like every Greggs that I've been to so far, I've kind of seen them quite busy, which is a positive thing. Obviously that kind of will get reflected in the earnings by the time it's come out, so we'll have a look at them when they do come out. I'll probably make a separate video about it. But Greggs at these sort of prices is a very cheap stock. You know, it's now got to the point where it's pre-COVID levels as we're recording this video, and it's a company that when we look into it, it's done fantastically well. Currently in the UK, the stock is growing quite well on its profit side. It's growing fantastic on its revenue side, which is a really strong thing, because when we invest into companies, we're trying to think about, how am I going to make money on this company? When I invest in this company, how is it going to make me more money? Why is the share price going to go up? And Greggs is a prime example where you look at the company and it's making more profit, it's making more revenue, it's increased its dividend previously, obviously until it cancelled it because of the COVID situation. But when you invest in a company, you got to look at why you're going to make money on it. And I look at Greggs and I think, if they carry on how they are doing and they're going to increase the profit and revenue, dividend gets increased, the share price is going to follow it. And that's come from a big variety of things. It's come from a great management team that's been there. They've started working on their own supply chain. They've also started expanding into like a vegan menu, which got publicity for maybe the right or wrong reasons. And it's also got a partnership with Just Eat now. So, you know, you got Greggs on Just Eat, which is crazy. But hey, it's another, you know, advantage to the company, another additional income stream. And as well as that, pre-COVID as well, this is why I like buying into this company, is that when we look into Greggs' pre-COVID situation, the company went into that situation with a very good balance sheet. Now obviously it's kind of changed because it did have the lockdown situation. It did shut a lot of its stores, which obviously affected revenue, profit. It had to take some debt on, but when this company starts fully operating again and starts getting back to profit, hopefully next year, it'll start sorting that balance sheet back out again. But that's the thing with a lot of these COVID stocks, is, you know, looking for the ones that did well pre-COVID, will do well after COVID, and went in with a strong balance sheet. And this company is it. So it's my second biggest stock, and I would not mind adding a few more shares into this, because I don't know how long it's going to be at these sort of prices. Number 2 is Hollywood Bowl, and this company as well is another company affected by COVID. Massive sell-off in the stock price, and you look at the stock price and you can see how much it has sold off to previous valuations. It's a very, very cheap company right now, and it's had a lot of share price gains totally wiped off over in the last kind of couple of months since COVID. You know, it's gone down absolutely huge, and it's kind of at bargain prices. And once again with Hollywood Bowl, I've seen them quite busy when I've gone past them. And once again, when I look into the situation of how am I going to make money on this company, why is the share price going to go up? Well, you can see the share price went up historically as well, but the company has been, once again, really well managed. And what has happened with this company is profit has grown. revenue has grown fantastic, and the way they've done that is by getting great venue locations. So they kind of open a lot of these bowling alleys. It also has arcades and bars, and it selects them in great locations next to cinemas, restaurants, so that, you know, when you go out for the day, you might go bowling and then you go to, you know, a food restaurant, or you go to the cinema, you go bowling, or you go to the bar, or maybe you just pop into the arcade afterwards. You know, they select them in great locations, and at the moment they've just got over 60 venues. They were looking to increase that into 70 venues until COVID. I'm sure they'll get back to them plans very soon. And then you talk about, why is the share price going to go up? Well, it's going to go up because they're going to have more venues. If they have more venues, the profit increases, the revenue increases, the dividend increases, and then you have more people invested into the stock. And it seems like it's massively sold off for a company that's now operating and seems to be doing quite well. The only risk that it does have to it is the second lockdown. It could be one of the first ones to go if there's another, you know, big lockdown. I think that's the only thing that's keeping it down. But at these sort of prices, I think it's really disrespected. And if it stays at these sort of prices, even though it's my third largest position in the stock market, if it stays here for, you know, a very long time, it could quite easily come my second or first biggest position, because I think it's a great company with a clear path on how it's going to do well over the next few years. And number 3 is Dart Group, or I can actually start calling it Jet2 now, because it's actually starting to change its name to Jet2, which is fantastic. I said it should have done it quite a few, well, I think I said it like 2 months ago on a video. I was like, I think it was the video that I did just on Dart Group. I said, can we just change the name to Jet2 then? And they've actually done it, so which is really good. The ticker symbol's changed to Jet2. The company's going to change to just Jet2 and not Dart Group. So that's a positive, I guess. It might just kind of, you know, people looking through the stock market and like, Dart Group, who are they? But, you know, now if they see Jet2, they're like, oh, I know Jet2. So hopefully that kind of attracts a couple of new investors. But I might buy some more shares into Jet2, depending on what goes on in the current situation. I'm not buying them right now, but towards maybe the end of this month, I might start buying a few more shares. Obviously, when it's like the school holidays, a lot of people like to go away because they've got kids, and they can only really go away really in the school holidays, can't they? And obviously with what's going on and what I've heard about second lockdowns and everything like that, if that kind of happens, travel restrictions, I see a lot of companies like Jet2 cancelling. I thought October half term could be the first okay like holiday season for them, but it looks like it could be another write-off. And if it's another write-off, what we might see is the share price drop down a little bit. Might drop down to, you know, the 600s, maybe even to the 500s. We'll see what happens, but I feel like if they have to cancel a lot of flights because of the lockdown situation, what we'll see is the share price go down, and I'll be able to pick it up cheaper. So I'm not buying right now. It's just one that I'm watching very close and watch the news over the next kind of week, 2 weeks, to see where the share price goes in the short term, because I have a feeling that I might be able to pick it up cheaper if a lot of holidays are cancelled, like how we saw, like, you know, early summer, when, you know, a lot of flights were getting cancelled, share prices were getting hurt. And obviously there's a lot of risk with airlines, you know, don't get me wrong, you know, it's going to be a while till they get back to where they were, but you've got to look at which companies were doing well pre-COVID. And I look at Jet2, and it was a company that had fantastic profit growth, fantastic revenue growth. It was, you know, expanding. The balance sheet was a very fantastic balance sheet for an airline company. So the management did a great job. It was doing really well at what it was doing pre-COVID, and I think it'll carry on it after COVID. You know, the adverts were fantastic. Overall, just a well-managed company. I think this one and Wizz Air are the two dominant, you know, best UK airline stocks to be buying into right now. And I like this one because it's local to me as well. So for right now, I'm not exactly buying Jet2, but I think there could be an opportunity here, depending what happens with October holidays, and it's the one that I'm definitely going to keep the eye on. So Greggs and Hollywood Bowl, probably the ones that I buy very quickly into the month of October, whereas this one's kind of one that you guys and I am going to just kind of, you know, step back and just keep watching that one and see how it goes over the next kind of few weeks. So those are the 3 UK stocks to buy in October 2020 edition for me, guys. Let me know what ones you're looking at buying. I always like hearing about, you know, companies you guys are looking at. Sometimes it gives me good ideas for companies to look at as well. So I appreciate you guys putting that in the comments. If you are new around here and you made it to the end of the video, hit that subscribe button. It'd be absolutely amazing. If you're always here, make sure you smash that like button, guys. Let's try to get to a lot of, you know, 500 likes would be really good on the channel if we can do it. And as always, I'll see you in the next video.